It's been a really solid credit environment. There hasn't been any problem at all in terms of companies raising money. Part of that's been the stable economic backdrop and the expectation that rates will be coming down here. It certainly is a bull market in that regard. Spreads remain tight. Issuance window is wide open as far as debt. And despite some of the tremors in the private credit markets, that really hasn't turned into anything more yet other than some idiosyncratic events.
How about in the equity market? We've had a really sharp rebound led by our old friends in the technology space, the semiconductors. Feels like old times again. What do you make of this market and this snapback in this market?
Yeah, I think that's really the central story here for the equity market. So you've had a couple quarters in a row of great earnings and stocks didn't go anywhere. You had the disruption in the Strait. Yep. Market seems to be willing to say, look, let's let the micro outweigh the macro here. Let's put the issues in the Strait aside and just focus on strong earnings. One thing I've been really encouraged by, it's very early so far, but while the revenue beats have been pretty modest, the earnings beats have been very strong.
Yep.
And that tells me that people are continuing to underestimate the power of productivity here and the power of margin expansion, which are at all-time highs again.
The chart this weekend, it looked like a Gina Martin Adams chart to me.
Yep.
The persistent margin expansion.
Yep.
I did not see that coming.
No. Is that so? As Tom raises the margin question, can we credit AI at all here? Or is it too early for any of that?
I think we can. I mean, you're starting to see anecdotes from companies. You're seeing the biggest surprises in the sectors that you would think would have the most obvious applications of the technology, namely in the tech sector, some in finance. I think there's eventually a story to be told around healthcare. And one of the things that is encouraging as well on the story is that you have a lot of companies referencing that they're able to grow revenue without expanding headcount. They're not cutting headcount necessarily; they're keeping it flat and continuing to grow. And that's a really healthy profit margin expansion story.
And that's kind of consistent, I guess, with the no hire, no fire type of labor market we've seen to be fine. Exactly. What's screening well for you guys this year, whether it's stocks or bonds? I mean, where do you kind of spending your time these days?
Yeah, I mean, this rally's been pretty encouraging and exciting. We've gotten a little bit more cautious. We'll see if we revisit that. And by cautious, I mean just neutral, not bearish. Yep. But I think the real story here will be reactions to tech earnings this week and beyond. So one of the things that, again, I think threw a little sand in the works over the last couple quarters was the numbers just weren't good enough. I think there's no doubt the numbers are going to be excellent out of tech on the earnings front. Stock reaction will be what's really important. Yep. If these stocks rally on earnings, then I think we have a long rally ahead of us. And if they hesitate on earnings, then I think we have to maybe be a little more cautious. The second tell will be, do these earnings and productivity gains expand to a broader set of the universe? So more sectors, more market caps participating in that margin expansion.
Was that rotation we saw late last year maybe out of some of these growth high-tech names into some of the more value parts of the market? Was that just a short-term trade? Are we now going back to kind of the tried and true, let's just own the tech?
Seems to be that way in the short term, but I do think those other areas have some runway in front of them. In my view, the story spreads. The tech gains and the productivity gains start in technology, they start in finance, they start to spread from bigger companies to smaller. At the beginning of this AI trend, we mapped out 3 waves of AI adoption. So, sort of the building of the infrastructure, the big hyperscalers, and then into the users. And I do think eventually the companies using tech will be the ones to see the biggest gains. And that will create a lot of dispersion. I think management execution is going to be critical here. Some companies will be great at making these changes happen. Others will not. Right. And that'll lead to some dispersion.
I want to get this in. We had a wonderful email from a listener in Durham, North Carolina. He's smarter than we are, for starters.
No question.
Fred, I did this with Rebecca Patterson. Let me do it with you. Every textbook you and I ever read said equities will give you single-digit, 200 beeps over nominal GDP return. And we've had this 15-year juggernaut. Who's right?
Yeah, we're in a wave where we're outperforming that long-term trend, and it probably continues for some time. We've had a number of technological advances that allow companies to really exceed that historical textbook benchmark, and it probably will continue in coming years. I think there's a lot of legs to this AI and productivity story. Robotics is a big story as well. But eventually we'll get to a period where we're under that trend. There will be environments where there aren't a lot of tech developments and the economy's not as strong and we underdeliver.
Right.
So